welcome guys to Buttersmooth Crypto. That's my sub channel, and right now we just got done recording some chart analysis. This is gonna be more of a podcast version of the crypto channel. We're gonna answer questions from anybody that has questions. My I'll block that out.
Holy fuck.
I can edit. Crypto King. Sorry, you guys not gonna hear the his name. Crypto King, my mentor. He gonna he's gonna answer these questions, very specific questions that for us that we already been. I've been in the market a short time, amount of time, but my Crypto King buddy here, he's been in there for how long would you say?
I don't even know.
Yeah,
Like
a long.
7 years? It's been a
Yeah,
while.
that's a long time. So right now, we're gonna get into some very specific questions. He's gonna answer them, and if I have questions of my own, because this is more for the public, I'm still learning. He's teaching me right now, so this is gonna be a learning experience for everybody that's watching. If you keep watching my channel, you're gonna learn a lot. Not from me, but from Crypto King. He's right next to me. You guys won't see him. You guys don't know him. You guys will never see him. You might find him on Instagram. That's okay. If you find
Right.
him, that's fine. But he's he's not gonna be nowhere to be. All right, dude. You could start out with the questions. I sent them to you earlier.
Okay. Like Jonathan, Mr.
Mm-hmm.
Buttersmooth just said, is we just recorded the first episode of
Butter
his
smooth.
new YouTube channel, and we just really wanted to go over in detail certain questions, more specific questions, either general knowledge questions or more advanced questions that most people really would have. So that's why we're going more so podcast style. And for the first question that Jonathan gets asked a lot, I do get asked as well, is what kind of technical analysis do I use for the crypto charts? Which that's a super broad question. Broad question. I don't know how to answer that, but I do my technical analysis on TradingView, and from there, just basically wants to know what I use. If I use specific indicators, the Bollinger Bands, the MACD, the stochastic, the Fibonacci, anything like that, which yes, I do. My specific style trading, I love to keep it as simple as possible, the least complicated, the better. So I just trade it based off of major Fibonacci retracement on the monthly time frame, and then I look into the weekly time frame just to validate those levels, see if everything lines up, if I'm drawing the Fibonacci correctly from wick to wick, from swing high to swing low, or if it needs to be wick to body, body to body in general. Um, so that's the Fibonacci. Other than that, I really don't use anything else besides basic historic levels of support and resistance. And I do find that as well on the monthly time frame. And then if I want to find a little bit more valid levels of support and resistance, I will go to the weekly just to find a few more. Um, all the indicators are basically lagging indicators, so it's really hard to base a trade off of a lagging indicator for me specifically. That is, I don't want to say a rookie mistake, but that is a lot of indicators that new traders look into are lagging indicators. Question number two from here would be, what time frame do I trade on? What time frame is the most valid, the strongest, and profitable? And when it comes to specific time frames to chart on when you are doing chart work, would be the biggest time frames. Like me and Jonathan have done, I try to nail it into his head that it's the bigger the better. So the monthly time frame, weekly time frame, the daily time frame from time to time, but specifically the monthly and weekly. Then from there, we have question number three. How are you deciding on when to
Hold up.
enter and exit?
Before you move on, I'll have a question from the previous one.
Yeah, go for it.
Let's say, why don't you trade on the 1 hour, 4 hour, 6 hour? What would be your reason not to trade there?
Okay. I mean, that's a good, valid question. Is the smaller the time frame, the less reliable. So if you go on the hour time frame and find an inverted head and shoulder formation with lagging indicators of MACD, and you're getting bullish divergence on the MACD, the volume, Bollinger Bands, whatever it may be that you're using, is that more times than not that isn't going to come through because it's on such a small time frame and it could really print whatever it wants to. Whereas if you zoom out to the daily, weekly, monthly, whatever it may be, you may see we're in a completely um,
Market
no, not market, but like pattern
pattern. Yeah.
from
Okay.
going from an inverted head and shoulders formation to, okay, well, we're actually in a bull flag. And if we do drop from here, it's not going to be a 3% movement, and it's going to be a 20% dump.
Oh, okay.
So that's why I stick with the higher time frames. They're typically a little more valid. They typically come through a little bit better.
All right. Next question.
All right. So next question would be, so I asked it as, how are you deciding when to enter and exit a trade? Is off of the Fibonacci levels. If you're bouncing between the 61.8, 78.6, whatever Fibonacci level it is, regardless if you're longing or shorting, you're just playing the swings. You're playing from the first movement, second movement, third movement, whatever wave count you're in, or if you're bouncing between both Fibonacci's and not breaching too much below the lower Fibonacci, not breaching too far above the higher Fibonacci, the resistance Fibonacci at the time, you would just bounce in between the two. And then,
So something that I want to for you to explain better, because people think that you have to be looking at the charts 24/7, that you just got to be sitting there and watch it bounce up and down and capture the price, but you really don't have to do that once you set the Fibonacci retracement, right? You can see the prices that it's going to be the resistance and the prices. I mean, not the resistance, the support, and the price is going to be the resistance. So you kind of have an idea where to buy low and where to sell high.
right. And I mean, with any trade, you want to have a plan
Hmm.
before you get into it. Is okay, I'm interested in this coin because it's this far from all-time highs, and Bitcoin is already at all-time highs. So there's more potential, more money to be made in this specific trade.
Hmm.
When you're looking when to enter, it would be like you said at the bottom of the Fibonacci. You would want to have your limit order stacked there, laddered in, maybe between like three orders right above that Fibonacci, right at that Fibonacci, then your biggest order right below the Fibonacci if you are longing the market, if you're buying and hoping price goes up. And then vice versa, the same way of getting out is you would have a plan that, okay, we're at this Fibonacci level, the lower one, and you're longing, and okay, I will be happy, content, satisfied if price bounces to the overhead Fibonacci to retest as resistance. And just like how you scaled into the trade, you would scale out of the trade. You would have a sell limit placed right below the Fibonacci, a sell limit right at the Fibonacci, and then your biggest sell right above the Fibonacci.
So for the simple man like me, what it means, you got to sell a little by little at certain price points. You don't want to get all out of the market at once, and you don't want to be in the market all at once either. So it's kind of like a balance. There's a balance, right? That's what you would say.
Right.
Correct me if I'm wrong, if I'm, not explaining it right.
No, I mean, that is correct to an extent.
Hmm.
If you're expecting us at all-time highs right now and you're not out of 90% of your holdings at all-time highs, then I would say, yeah, all in or all out, you never want to be. But if you're closer to the highs, you want to be closer to being all out of the market
Okay.
compared to if you're at historic levels of support around the, $3,500 level of our most recent crazy low,
Hmm.
you would want to be mostly in the market buying and laddering your buys and dollar cost averaging because we're at such low levels, such low historical levels of support.
Okay, awesome. All right, so we're gonna get to the next question now.
Good question. And I mean, we want to remember too is Jonathan's here learning with you guys as well.
Exactly. So if I sound, retarded, if I sound dumb, please let me know.
Right, exactly.
Yeah, because I'm here to learn and I want to learn with you guys. So this is a great thing for us to do because you're not gonna get a person like him breaking down analysis like this. The YouTube stuff. Yes, I'm using a clickbait on this video. Yes, I am, but they're not gonna give it to you simple. They're gonna just over analyze things and make you confused more, but you're thinking that you learned something because and I'm speaking from experience. I'm not just saying you guys but myself. I think I learned something, but at the same time they're just not saying anything. So I didn't learn anything because I haven't made money listening to those people, but I made money listening to my buddy here. So there you go.
Right, and I mean the proof is really in the pudding. If
Yeah.
someone is here on YouTube, they're not showing even a portion of their portfolio and
Yeah.
they're bragging about big gains, big pumps, anything like that. But it's like where you're not being open, you're not, you know, you're trying to just talk the part without showing that you've actually done anything.
Exactly.
All right. So the another kind of popular question would be how do you cash out of the market? Like so when you're in a trade, you take your profit and you're in USD holding, how do you cash out? So the big thing is the $10,000 movements between any institutions are going to throw red flags, especially if you have a typical 9 to 5 job, you're making under 70,000 a year. If they see $10,000 movements in and out of your bank account, how do you get around that? So realistically, there's no real way to get around it. There's no, you know, secret pill you can take to get out of not paying your taxes. So you'd want to be as honest as possible, but humble yourself, know yourself. Are you really going to be making $10,000 profit per trade in a day, in a week, in a month, blah, blah, blah? Be realistic with yourself and just know if that question even applies to you. And if it does apply to you, you should know how to get around that. So,
We're going to the next question.
next question would be
Let's see. We
what
have
factors do you decide on when getting into a trade? Is it based on any new information, liquidity, supply, or technicals? So, basically, people want to know is why are you getting in specific coins opposed to other coins? Why didn't you buy Shiba over Dogecoin? Why didn't you buy Ethereum over
Bitcoin.
DOT? Right.
Hmm.
Just the questions like that. So, like I said, I do all of my technical analysis based off of the Bitcoin chart. I rarely look at any other pairing, any other crypto chart. Everything's based off of Bitcoin. And from there, I just look at, what fib levels are we at? Are we at all-time highs? Are we at all-time lows? Are we in between Fibonacci's? Is a Fibonacci on the monthly time frame valid, but you have a Fibonacci extension on the daily or 4 hour that's also playing out. So, really, from what I've been doing here with Jonathan and Buttersmooth, is that we'll do swing trades. We'll trade altcoins that are at a lot lower, a lot further away from their all time highs in comparison to Bitcoin, because Bitcoin, we're literally here at all time highs. If not, we're less than 2% away from all time highs compared to other altcoins that we'll look at that are 70, 75% away from their previous all time highs. We're putting our money into coins such as those. But again, you have to trade with the market conditions you're in. You need to trade with the trend and see what's moving. So at different times, if we're at all-time lows, if we go back down to challenge previous all-time highs around 19 or 20,000, your trading strategy has to change. So, I mean, a lot of it is adapting with the market. So from there, do you have any questions from there, Jonathan?
No, I think I'm okay right now. Let's see if there's another question.
Okay, so after that, it looks like that is all the questions that
Okay.
we have right now.
Okay, so yeah, so when going okay, let me think of a question now. So when going with the old coins, right? I think you're just playing why you're so sure about these older coins, like why are you so sure that they're gonna pump? Like, how do you know that the price is gonna go up, right? And I think you should go more into depth how the altcoins are connected to Bitcoin and on their movement. Because all the coins follow the movement of Bitcoin. And I think explain on just a little bit of that because we're getting, we're already past our 50-minute mark. We said a 50-minute mark,
Right.
but yeah. So just a little bit. You just have to be into in depth, but yeah.
Yeah, so um, let's just say too, because it is getting towards the end of the video, is that this is just our first video, first podcast. So as more questions come in, we could, get hit the questions a little shorter and more, spend a little less time on each question to where we're explaining it a little bit better. But how you're saying is why I'm picking specific altcoins
Yes.
when I look at the market. Why would I pick Shiba over Doge?
Hmm.
Why would I pick DOT over 1inch? Why would I pick EOS over Polymath?
Yeah.
So, really, it's just if I'm looking into getting into a swing trade, I want to see what I could get into as quickly ish as possible
Hmm.
because I'm ready to get my feet wet. I want to get into a trade. Um, so I'll look at those specific coins and see what their 24-hour price movement is. Obviously, looking for the reddest coin. Then from there, when I mean red, I mean in the negative
Yeah. The
down.
lowest price
Exactly. The
ever.
the biggest price drop in the
Hmm.
most recent 24 hours. So from there, I'll look into it. Is it a blue chip coin? What's the market cap? And am I going to be able to get in my size of a buy in and then my size of my sell out of the market relatively easily. You want to coin with a higher market cap, good volume, so you don't get your money stuck. From there, I would probably narrow it down to about three or four coins. Then from those coins, I would look into okay, this coin is 61.54% away from its previous all time high. This coin is 61.95% from its all time high. But this third coin is 85.34% away from its all time high. I'll most likely go with the coin furthest from its all time high. But then from there, again, to just keep diving deeper, just to see how OCD you are about a trade, you would dive in to see how long the coin has been around. Has it been around since 2020? Or has the coin been around since, 2015? So I would obviously go with the coin that's been out and around for the longest time.
Okay. Yeah, that was great, dude. I mean, that's how you cover a lot in a small time frame. But I mean, don't worry, guys. We'll make more videos on crypto. I'll be bringing him around, of course, because I can't do it all on my own. Not right now. Hopefully, I get to that point, right? But yeah, this is gonna be a learning experience for everybody. And I want to thank you for watching this video. Please subscribe, like, comment, whatever. If you have questions on the YouTube channel, please comment the questions and they will get answered. So thank you once again. This is Butter Smooth Crypto, and I will talk to you guys later. Peace.